Hey traders, what's going on? Jamie Saettele here. It's the midweek strategy webinar with SB Trade Desk. It is March 8th, 2017. Let me know that you can hear me and see the charts. And once I got it, we'll get going. Okay, Pooja says, hey, what's up, AV? Good. Super duper. All right, so we're going to start actually today. I want to start with some bigger macro markets. Kind of set the stage for exactly some of the big levels that I think could really change things. So this is the S&P. Remember, we're getting up into big levels, obviously. The levels back here from the long-term chart that were published back at the end of January, we're actually getting close to some of those levels. So we talked about the S&Ps 2335, which we've already hit, gone through, and 2459, and then the Dow was 20,190 and 21,330. So here's the S&P chart, and you can see that your parallel, the upper parallel, extended off the highs. So we've already hit this one, which goes off a good number of pivots. But the big one is 2466. I had 2459. I think it was just I was using maybe a different index. But whatever, the general area of the 2460s. Okay, so it's only 100 S&P points away. It's not very far. And if we really are in some sort of a blowout, then that could be reached pretty fast. So that's kind of an area to know. Near term, still, it's still within the confines of a strong uptrend, right? And you can see this is one of those long-term channels up here. The other one, as you can see, is way up here. But even if you break this one, I wouldn't necessarily say that, all is lost and that the bull market or whatever is doomed immediately. I would actually pay attention to and watch these blue lines. It's essentially your channel from the beginning of the year. This is the December 30th low, just a simple trend line. And the highs, okay, cross perfectly there as well. 1.6, 126, broke through and retested it on 2/14 on Valentine's Day. And if we were to get down there again, it would put us probably near 2350 or so, pretty close to 2350. Okay, so that's an area to pay attention to if we do sell off, over the next day or so, next couple days, really the rest of this week, right? This is your zone. So that's what I would pay very close attention to in the S&Ps, and that is important, obviously, from a FX sentiment, because if we start to break this, I'm sure that there'll be panicky talk on the yen crosses and everything else. And really, you don't need to be panicked at this point because you'd be coming into support. You could actually see risk tick up again. The biggest market right now, as far as the cleanest, as far as tech levels are concerned, I think is this gold market, right? So on the weekly chart, we've rolled over the weekly reversal. I still like the general upside on this on the weekly chart because of the simple fact that the low back in December was at the midpoint or the median line of the channel, which again, that means you're putting in a higher floor potentially, right? And that's a bullish thing. So I like the idea of getting bullish near 1180, not just big in the fact that it was a low back in January, but its lows back here in 2013 and 2014. All right, I guess it's very late 2013, December and June. Okay, also a resistance back in October 2015. So when we take that kind of broad view and look at the short-term picture, treating this as a leading diagonal, 1, 2, 3, 4, 5, and we are getting a very deep retracement, quick retracement, and have already come back into the lows from February. All right, February low is actually right here. It's about 1197. This is the 2-3 low. We tagged it today. Would think that you get some sort of a bounce here, maybe a $10 bounce. But at this point, would probably be looking at resistance at 1218, 1219. That's the old resistance back in January, support in February 15th. And here's why this is so important, right? So as goes gold, a lot of times, as goes the dollar, maybe not tick for tick, but the point I'm trying to make here is that it's probably not a super idea or a super big opportunity to be necessarily short the dollar until we get gold to kind of get to 1180 and do what it's got to do before it's allowed to rally again, right? We've seen this big move from December up here from, all the way down from 1120 up to 1260. It's $140 rally in gold. And the dollar didn't sell off a whole lot, right? It really didn't. I mean, the euro's more or less at the lows, pounds near the lows. Aussie and Kiwi were the ones that benefited, and they've really come off hard. Dollar CAD's ripped higher from its support. Dollar yen is not up at the highs that it was, anywhere near in January, and we'll get to that. But really, the big thing here is for follow gold. So if we bounce here, which I'm looking for a little bounce, we get like a $10 bounce or so. If you can get up into this resistance at some point, maybe do a little consolidation, that sets you up for the next leg lower in gold into maybe FOMC next week, which would also set you up for that final push higher in the dollar. And let's go to that dollar chart. So really still playing out pretty well here with the median line, the June-September trend line slope angle, okay? And we got the A, the B. We're able to get support down here. You remember very late in February, dollars ripped higher, had that Friday sell-off, suggested it was a fourth wave, does seem to be the case. Low here on Monday, and here we are going higher, probably in this little fifth wave, and getting pretty close to your ideal resistance points if indeed the dollar is going to end up finding resistance. The horizontal level to probably watch is probably pretty close to the year opening price, which is actually, okay, it's 12,587. It's a little higher than I thought. Let me see the weekly reversal level here. Weekly reversal level is going to be something to watch out for. That's going to be 12,539. Okay. That's going to be a big level to watch. I'm going to bold that one. Okay. All right. So going back to our 4-hour chart, you're going to have a 618 retrace, a 12,491. It's a good looking level because you also have this up here, the 113 high, but I would hold out for the weekly reversal level at 12,539, which would be much more in line with the slope lines that we're looking at, which have really done pretty well as far as identifying support and resistance, right? That's what I'd be really focusing on. And, if we look at consider gold and everything else, what you'd really want to see is the gold market down at 1180 when the dollar's up here. All right. That's kind of, I think, what you really want to watch out for. So that's my spiel on the dollar generally. All right, dollar yen. Let's go dollar yen. weekly chart, holding good support. Okay. Do you think we can get back up to 117.50, which is the trend line? You know, not so sure. What we've got as far as near-term picture is concerned. Went to bed last night and saw dollar yen starting to roll over and thought that maybe if you got a pop, we would stop at that 114.24 area, which was the volume level that I talked about, and that'd be able to get you down here before you got a leg up. But dollar yen turned up sharply during Asia. Sarab asking silver. Yeah, of course, I will definitely look at silver. So at this point, I would put 114.20s as support. Okay. With stops under 113.50 and looking towards essentially the highs up here near 115.60 to 116, with 116 being the big level because it's the 618. 115.92 is the 618, and then of course you've got the lows here in early January, 116.03. Even if you did a little range expansion of this right here, okay, that target would be 115.94. So you got a lot going on for you in dollar yen up there. So currently 1460, 1350 would be the stop level again. But first area of problems probably around 116. So right here would say 100 pips of risk, but you could get 140 before you start to run into problems potentially. And of course, there is the possibility that you get a much better move up into 117.50 on that longer term trend line. When thinking about obviously the dollar yen, you want to get an idea for gold. And so I do think dollar yen can go higher and goes higher because again, you've got gold probably going to 1180, right? Ideally, a nice little bounce for gold here, as I kind of have hinted at the last day or so. A nice little bounce for gold would get you a dollar yen pullback. At this point, we'd be looking for that 1420s support. What about the Nikkei? Because the Nikkei sold off pretty hard, okay, from 1960 or 19,660s down into below 19,200. It's over a 400 point decline, and dollar yen's pushing up near its short-term range highs. Well, don't forget, we do have on the Nikkei, we do have this triangle pattern, right? A, B, C, D, E. If this is one, this little pullback here, it's a pretty good way to do it if you finish the day like this. And if I go short-term, 60-minute chart, what is this? Is this a correction or what, right? It looks like a 5 to me. That's the problem. So maybe things get real difficult and we go a little higher and then lower before we move up again. I guess the focus here should probably be on the next trade. And as far as I'm concerned, it's to buy a dip in the Nikkei, buy a dip in dollar yen before you go higher. This is a 15-minute chart now, and it's pretty clear. 1, 2, 3, 4, 5. Look for the pullback here, 19,290 support, and then you can go higher. So that's the next move as far as I'm concerned for dollar yen and the Nikkei. All right. All fits very well and nice with potentially getting a pullback or a bounce, I should say, in the gold price before it heads, back lower again. So that's a potential trade idea for the next day is dollar yen, 1420s and then higher. But watch that Nikkei, and if you want to get more confidence in it, watch gold. Okay, let's actually go to crude oil. I'm going to do that, and then we're going to go right into dollar CAD because we're starting to get movement there as well. So it took a while, like 2 months, but you're starting to get the dump in crude oil, right? Here we are below 52 bucks, and crude, looks like it needs to wash out a little bit. And I still think it could get to 56.50 before you really roll over. And if we take a look at the daily chart, log chart, you can see the importance. I think been having problems, identifying where's the good slope on crude. This might be it. Just the lows here from April 2016 and August 2016. You get a support there at November 2016. Okay, and then the parallels are pretty solid, right? Extended off the September 2016 low. Same slope hits these highs up here, which is a good sign. Okay, so if crude's going to move higher at all, it probably needs to find support near 49.60 or 47.50 would really be a last ditch level. Otherwise, this thing is really screwed. Okay, as far as crude's concerned. And then if we move into dollar CAD, obviously a lower crude oil price getting you a higher dollar CAD price. They've kind of taken their sweet time joining together, right? But they are moving in tandem again. And here's that freaking support, which held perfectly. And looks like we got to go, as I wrote in the long-term update, good long-term update this last weekend. There was a lot to update as things start to clear up a little bit. It does look like we are going to be heading towards a move up through the high from December, 35.90, at which point you're going to get the potential for a really, really big trap, right? That'll be like the short of the year up there. How high? Look, I don't know. I don't want to make any guesses at that right now. In the near term, though, I'm looking to buy a pullback. I've been looking to buy a pullback all week, and we haven't gotten one. So, if we get one, great. One thing to look at, I've been going over some shorter term dollar CAD charts, not necessarily shorter term, but just price action from here. Okay, and there's a channel to look at right here, and here it is. So if you just do a channel line, okay, off the lows, this is arithmetic, not log. You do get some good touches, and it would line up with basically the setup, my favorite setup, which is just to look to buy the top, a retest of the top of the old channel line. Okay, so it's still your spot to do it. It's around 133, right? 132.90, 133. So we're at 135 right now. That'd be a pretty decent drop. I don't know if you're going to get that from here. That's probably asking too much, but if it were to happen, be aware of it. So, you'd be looking down here and then looking for a move up, maybe all the way up to 38.60 or so. And this could be the new downslope, okay? As you can see what it does over here, right? We call this very speculative, but it's certainly a possibility. So the understanding or the bottom line at the moment is that dollar CAD's probably headed up towards 139 or so, 138.50, 139, which, by the way, is going to be about your 618 of this whole thing. And how come I don't have any? What? Can I just draw this? Oh, hold on. I guess I don't have the fibs highlighted. Yeah, okay. 618 is 38.38. Okay. So, in other words, we could be going like 400 pips higher, not quite 400 pips, but something like that, close to it. And where to get in would be, again, if you got a dip down near 133. Don't know if it's asking too much or not, but that's what I would be looking for. Okay, so that would be dollar CAD and the crude oil uh, relationship. Okay, Aussie dollar. Aussie. Um, this is the short-term picture. We just got a divergence reading, but kind of willing to overlook it, just because I do think the dollar still heads a little higher, right? And we have an Aussie Kiwi chart to look at, which I'll look at towards the end of this. But so this is the slope, right? And let me get this stuff out of here. Remember, this was the setup. We were short here. We did get a little overthrow, but that was okay as it's turned back down. And I am looking towards 74.50, and there's a couple reasons for that. Maybe a little lower. Again, if we look at the daily chart, okay, you've got what could be your new bullish slope, and that would be a little lower than 74.50. It's like 74.20. All right. And there's a lot of stuff that lines up in a zone down here. You've got 73.80, so that's below it. But then 74.20, okay, some lows there. But really 74.50 is the spot, I think, right? 74.50, 74.50, and then, well, the 618 is 73.80. The 50% is 74.50. And I know that the 70% people look at, or the 50% people look at, is not a real fib, and it's not, but it is a good reference point. So 74.50 to me is a level that I'm going to pay close attention to, and it's where I'd like to at least get out of a short position. Maybe not necessarily go long right away, but be paying attention to it and thinking about maybe going long into that level. Okay. The thing with Aussie is, remember our analog, it does suggest that this is the month for really, strength to resume. This is the analog we're comparing back here, right? You can see these charts on the long-term page that are updated over the weekend. So going to the near-term picture with Aussie, while I like 74.50, real short-term, you might want to pay attention to 74.90. That would just be a parallel right here. Remember, on the way up, same kind of deal with the original channel line. Okay, you did get support. It was a better response than up here, but same idea. You want to follow the original slope lines. Okay, you did not get resistance. You went right through it. That's why I'm not really willing to put a target right at 74.90. But yeah, if you get down to 74.90 or 75 and you get a bounce, I'd actually watch this for resistance again, and that would be up at probably around 75, 65, 75, 70. Okay. Kiwi, which is just kind of seems to be a leaky faucet, and maybe wants to just spill out. So Kiwi 6 days down, 67.50 region seems pretty likely at this point. That's the last place for any sort of bounce, or I should say more of a low at that point. It's 2 legs down. Okay, you have a slope confluence there. You do have some stuff at 69. You got the highs back right from 2015, October and December are right up there at 68.80 to 69, and we're obviously just a few pips above that. So I've been thinking the Kiwi could get a bounce before you go to 67.50. It's a lot like dollar CAD, same thing really, is that in that it want to be on the dollar side of it, but it's not really allowing an entry at this point. It's just kind of a runner, which a lot of times is why I try to trade the turns and get in, because once they turn, they just don't really allow you to get back in. So that's the deal with Kiwi. And then, of course, there is the outside chance that Kiwi is just really, really, really screwed. But you don't have to worry about that right now. Again, I think you would end up getting a some two-way trade before that were to happen. This seems preposterous, but it might. I don't know. Kiwi's has done its own thing for a while, so maybe it's not. On short-term stuff for Kiwi, as far as trading it or trying to get into that trade, I'd really watch the same thing as last night, or that was posted last night. I don't like drawing the trend line off of this high up here because that was a spike. It took me out of a short, but that was a spike that was very short-lived. But maybe it's worth following. I don't know. 69.70s would be where you want to go. I don't, if I'm going to follow anything off the high, it's going to be that one. And even then, it's a little shy of where I'd be wanting to trade, which is 70.45, former lows, former highs in January. You can see it's the congestion zone that we had on Friday as well. Okay, but this could be the place to look up near, basically back near 70 over the next day or so. Right, the weekly open is 70.12, and you do have a square root level at 70.10. So maybe that is a realistic level to look up near 70. Either way, it's going to 67.50. If you get a bounce before then, we'll look at it as a short opportunity. Okay, Kiwi. What about cable? We took a shot on the long side, didn't work out, and it doesn't really change the fact that cable's still at this support, but I'm not really trying to, hold on for dear life with cable, because as we know, cable has a tendency, at least it has over the last year, to when it kind of gets dribbling lower, you get these crashes. So if that were to happen, maybe it would be worth buying the crash. At this point, if this doesn't hold, then I mean the next level to pay attention to is probably about 2090. It's the lows from October. You have a square root level at 2057. If we can turn up here, great, and then we'll look to re-enter the long side. But I'm not trying to just hold on to this and hope that it turns up. I like cable down here. I think it's at support. I think it's at a very long-term base. Long-term potential on the upside, but you got to get the entry right. One thing to watch for the pound. Okay, so this is a weekly chart, and if we close the week below 2180, you're going to have divergent, and as long as RSI is above 35, right? Because you can see right now on an intra-week basis is at 37. As long as it's above 35, you're going to have a divergent buy warning in the close, because the lowest 52-week close is 2182. So the last time we got buys on this on a weekly basis on the divergence, we're back here in 2013. It's actually kind of, the shape looks kind of similar, right? Up, down, up, down, up, down, up, down. And then for a period back in 2011, there were a bunch. There were 4 of them. And then top warnings up here. It'd be nice to get one of these that works right away. You know, some of these divergence signals, obviously, you don't take them. You have to put them in with the other analysis, right? These are secondary things, okay? Sometimes they can work really well, but you have to already be looking for, in my opinion, already be looking for a turn, right? Which is what we are doing. Like by itself, it doesn't mean much. So just something to realize, and we'll see where we end on Friday. Not something to worry about now because it's only Wednesday. Okay, moving on. Cable. All right, so let's get into, hold on one sec, hold on one sec. Give me 5 seconds here. Okay, sorry. Moving on. Euro. So tomorrow's ECB, right? So we've got some stuff to look at for Euro. Here's a long-term log chart showing where you are. I don't know, did we get another low? If we do, support's not for 300 or so pips. Euro has been, FX in general has been pretty hellish since March of 2015. All of this, right? So what about the near term? What am I watching for tomorrow? Well, heading into tomorrow, what I will be watching for will be this. Okay, we've got that. We've got this channel. I'll be watching this channel line right here. If the initial March ECB, okay, this was last March ECB. You remember it tanked initially and then the thing rallied 400 points in a couple hours. I'll be watching this because it's pretty close to the yearly opening price, which is 104.66. The channel is like 104.40. Okay. And on the upside, positive reaction, you actually have daily reversal resistance at 107.56, and that would intersect with the channel as well. So essentially you have, I'm not planning on going in and placing orders on ECB. Let the euro clear itself up before I want to do anything on euro dollar, but 104.40 and 107, more 107.50s are kind of the levels that I would pay attention to tomorrow, right, on ECB. There is something else to consider. So you remember presented this a while ago, but you remember we talked about 2000 and trade up into the 2004 high, right? And that the inverse was playing out. In other words, the mirror image of 2004. Well, it actually continues to play out. We were looking for a last, remember we were looking for a last week of the low, last week of the year low in euro in 2015 or 16. We didn't get it. We actually got it the first week of the new year. Okay. But look at the sequence since then. The pip movement hasn't been much to write home about. You had much bigger moves back then, but the timing's been the same, and the timing suggests that we get a low either this week or next week, and that we can turn up the week after that. So, coming into a low this week or next week certainly fits with the idea of the dollar topping on Fed. But the question with euro is it going to be at a new price low or not? So that's where we are with euro dollar. Looking for a low, analog, long-term parallels, year open, all that good stuff. Okay, so that would be euro crosses. Couple Aussie crosses to look at. So Aussie Kiwi. High today is, what's the high today? 109.25. This is really bullish on a longer term picture. Okay. But you are at a near term channel. It's a good horizontal level as well. So if Aussie Kiwi, this would probably be more Kiwi related, because I am looking lower in Aussie, but Kiwi is coming into a level where it could finally get some sort of a bounce, even if just for a couple of days, maybe one day, something, right? So would be looking for a dip in Aussie Kiwi, but I would be looking for that to also, I'd be looking for that to hold that dip, right? And probably near 107.70 because that's the former resistance level. Okay. That's what I'd be looking at, 107.70, 107.90, something like that for a hold if you get a dip here. And we're getting a little doji, so maybe we do get a dip today in Aussie Kiwi, but that would be a signal to start selling Kiwi probably, buying Aussie Kiwi if you wish. I'd rather trade the two separately, as I often state, but Euro Aussie. So we've dropped from, or rallied from the 2015 low, tagged it, and we're right back at the median line. Really, for me, I'd rather just kind of wait and see how the week finishes up here, right? Because this could end up being a great selling opportunity because you've come into the median line, which again was support, et cetera, for so long. But I'm not, trying to get top tick on this one because what if it trades up into the horizontal level over the next day or two up at 140.80 and then finishes the week down here? All right, that would be the sell signal. Okay, you're not missing anything by waiting on this. Not to mention ECBs tomorrow, not to mention Aussie still looks like it wants to leak a little bit lower. But something to look at on Friday, in my opinion. Okay, so those are all the prepared remarks that I've really got. Let's take a look at some questions. So silver was a market that I know someone wanted to look at. Sarab wanted to look at silver. And just a beautiful chart, silver, right? Log chart. Found resistance, the black circle lines. Okay, the blue circle lines is probably where you're going to get support, and it's not far away, right? 1695. Um, Ultimately, guys, this is all the same story, right? We've got gold probably going to 1180. We've got Aussie going a little lower before it goes higher. Dollar going a little higher before it goes lower. Silver is telling you the same story. Okay, came off of 1846, which is literally the exact level we were looking at for a very, very long time. It took its time getting there. It took the stairs up and the elevator down. So Sarab says levels to get bullish on silver. Well, again, 1695 would be an area. It depends on what your time frame is, right? 1695 is an area that I would watch for a bounce. I probably wouldn't want to get bullish, like straight up outright put on a long position for hold it for a while, until you got down to 1627 or so. Okay, because that would be a confluence between this and this support line. Okay. That would be an area to watch for, right? There's an outside chance that silver absolutely gets murdered for a while. There's actually a chance that silver is really bearish. Here's why. We are just a few contracts shy of a record long position in silver. Okay. The record long position was registered last July. Silver didn't do too well after that. So you got to keep that in mind. I wish it wasn't the case, but it is. Okay, so levels could bounce 1695 or so, but then 1626 or so would be your much more important level for silver. And if that doesn't hold, then silver's probably in a world of trouble for a while. Okay. But that would really be it. Another thing that you want to watch, and this might be the market tell too, is copper, right? We've identified copper resistance time and time again. And sure enough, copper is coming off really hard again from the resistance that it put in the middle of February, and probably can't have a good dollar bear market until copper finds its legs. And it's probably not going to find its legs until you get down to support, which is on the blue line. And the blue line is near 250, right? Remember, we have the high volume level for copper at 250.60. We might get there next week, and that would be the time to get bullish on copper and maybe silver, maybe the metals in general, right? Obviously, silver, metal, silver, copper, gold are all going to have different dynamics as far as what they do and why they do them. But generally speaking, if we're transitioning from this multi-year period of dollar strength, longest in history at this point, then okay, if we're hold on for a second. Okay, if we're pulling down into 250, 60 in copper, then you're going to be wanting to look at see where silver and gold are at that point. Okay, so that would be maybe the tell, right? Have markets that are sometimes they're tell markets, right? I think 1180 gold is a tell market. I think copper 250, 60 is a tell market. Okay. Um, some of the currencies, not too sure. I think Aussie is maybe a tell market at 74.50. Okay. Um, other than that, the currencies aren't, I don't think, anywhere as clean as some of the metals are at this point. So I'm really following the metals closely. Any other questions to go through or questions that you guys have on any of these markets? Seems like we're good to go. All right. Oh, euro dollar. Go. Pete says go long at 104.40 and short at 107.50. I don't know about that. Um, I can tell you that those are levels I'd be watching for. I can't predict the uh, the future with ECB tomorrow, right? I mean, that'd be great if that works out that way. I just those are levels that I'm going to be paying attention to in in euro. I mean, you got to remember euros, it's on this really long-term support, okay? But it's been there for forever. It's for like 2 years. And I know that the tendency is to just want to do something all the time. And that's, I get it. But if we can start to get something bullish on the daily, like basically the next time we get up to 108.20, I think that's the break. Basically, I think 1180 is the level to get bullish. Pooja's asking, is 1180 level to get bullish medium term? Or I think it's medium term. I see 1180 as a really big level in gold, right? Like a really big level. Like it's, I'm looking for 1180 to hold and for us to get a good move off of 1180, right? Like a strong rally. We'll see. It's probably going to have to wait until next Wednesday to figure this all out. Because of FOMC. All right. Okay, great. Anything else? Happy to look at whatever. Going once, going twice. Pooja asking about dollar INR. Sure thing, let's look at it. Dollar INR. Weekly chart. That would be a pretty strong uptrend, I would say. Wow. Okay, so why don't we just go from here? So one thing to note is obviously the trend is not as strong as it was. Yeah, Pooja, this is log scale right here. This is log scale. This is arithmetic scale. It's actually not as big as one might think. But see the trend line, how it hit here? Old support becoming resistance. It's actually promising on a weekly chart for downside. In other words, topping pattern here. Okay. If I go into a daily chart, I think this is when the Economist cover came out, wasn't it? About the rupee. It was right at the top, as it oftentimes is. Is there anything here to work with? Let's see. Nothing there yet. What about, what's this channel do? So there's 42 degrees. 42 degrees would be here. Oops. So you haven't even hit, oops, 40 degrees, 40 degrees. All right, so you haven't even hit the support yet. Which you'd like to see the market hit support to suggest that you have something of a downtrend in place, right? If somehow over the next couple of, really the next week or so, if you were to get down here, I'd be looking at that point to see what happens. Because if you were to get down here and break below, that'd be very bearish in dollar Indian rupee, being very bullish for the rupee. Okay, let's go even shorter term. See if we can get something. Okay, so if this is what we're dealing with, 19 degrees. Let's see if you get, I would watch this right here. You can see how this cuts through some levels right here. Okay. This is a 4-hour chart, so it's not, you know, especially long term, but this is so it could turn into something pretty good. So your obvious thing is the trend line. Okay. But you do have the slope on that trend line does seem to be working out pretty well. Okay, so I would look at if you were to get up into, it looks like it's about 67 actually, about 67 on dollar INR. That would be an area that I would pay close attention to for resistance actually. All right, because that's really where you sold off from last time on 2.7. Not 67, of course, but the slope of the line, right? So. And this is a lot of, it's actually a good time to go into, so like this is dollar INR. Does that help, Pooja, by the way, with dollar INR? Pay attention to 67. Good. Okay. Dollar rand, right? When we look at other kind of EM currencies, dollar rand has been a pretty good performer, right? All since last January, 2016. We are, however, I do have concerns here on the downtrend. Notably, you have an inverse head and shoulders pattern right here, which would complete on a move up through about 1320, excuse me. And we have not seen any sort of downside acceleration at this point, right? We haven't gotten any downside acceleration. You haven't gotten down to the median line. You are following, some decent. This is basically your channel at this point, it seems, right? So up here, I wouldn't be playing a head and shoulders long because of this, but I would be aware of the possibility that you get back up into resistance, which would be closer to, say, it looks like 1350, 1360. They're closer to 1360, 1350, high 1350s. Okay. If this is your downtrend, right? So it could be early stages of a downtrend, but you're going to get rallies within it, right? You can look back to a copper chart to notice something like that, going all the way back, right? Okay, so yeah, lots to say, lots to say on some of these EM currencies, dollar MEX as well. Coming into big time support for dollar MEX. Here is a chart of dollar MEX. Look at that. Right down to support. 200-day average is down here too. Okay. All right, guys. So I'm going to wrap it up there. We'll get this archived and up ASAP. Biggest, things to pay attention to over the next couple of days, and probably the next week, is gold 1180. Pay attention to gold 1180. Pay attention to copper 250, 2.5060 if you want to get real specific on it. Yeah, those are the big levels to pay attention to, right? As far as the metals markets. So a little more dollar strength. We'll be watching that US dollar level up into weekly reversal resistance, huge level to pay attention to. So coming into what has been for recent years, the turn period for the dollar, right into around ECB, FOMC in March, which is 12.539 in US dollar, okay? All right, so that's it for now. Take care, everyone. Have a great rest of your week. Thanks for attending. I'll get this up and archived ASAP. All right, bye.